Well, yes, given the sharp fall that we have seen overall in the markets, a lot of stocks have corrected largely. Now, Nifty 50 has dropped nearly 4.5%, in fact, more than 4.5% in the last couple of months. In fact, Nifty has ended in red for the second consecutive month, and this is second such instance that we are seeing in 2025. Now, this drop in market has led to nearly one-fifth of the widely traded stocks in India fall below the lowest target price that is there on the street. Now, there's a consensus target price, which is the average of all the analysts tracking the company, and then there is a lowest target price, which clearly shows that these stocks are even trading below the lowest limit or the lowest downside that the analyst had predicted at this moment. Now, there are around 349 stocks in India that are tracked by at least 10 analysts overall, and 65 of those 349 stocks are trading below their lowest target price. So which are those stocks? Firstly, it's Suntech Realty. Now, if you see the return potential from the current market price to the consensus target price, it stands at around 55%, and the stock is trading at a discount of nearly 42% compared to the lowest target price. Then there is REC, EPL, PG, Electroplast. Return potential is anywhere between 36 to 49%, while these stocks are trading at a discount of nearly 23 to 30% to the lowest target price. Piramal Pharma, Repco Home, PFC. Return potential is anywhere between 35 to 38%, and these stocks are trading at a discount of nearly 18 to 23% compared to the lowest target price. Apart from that, there is PFC I just mentioned, 5-star, PNB Housing, DCB Bank. These stocks have a return potential of anywhere between 36 to 48%, and they are trading at a discount of nearly 16 to 18% compared to the lowest target price. So why analysts are quite bullish on these companies? Firstly, when it comes to Suntech Realty, there's a strong pre-sales growth. Launch pipeline is quite strong, and the management has guided for a 20% YOY growth in collections in FY26. These are the reasons why analysts continue to remain bullish on Suntech Realty. For PFC and REC, the asset quality continues to remain strong. Loan growth book is expected to be quite decent despite the repayments that both PFC and REC are seeing, and credit cost is expected to be benign for them. When it comes to EPL, the management has reiterated their guidance of double-digit growth. Analysts are expecting margin and return on capital employed to expand going forward. They're also saying that the company has been generating steady free cash flow, which will also lead to reduction in debt, and management is also actively looking for an M&A opportunity going forward, which is also positive, something that the analysts are taking from here. When it comes to PG Electroplast, they're expecting the company to outgrow the industry and gain or retain their manufacturing market share despite the cut in guidance that we have seen coming in for PG Electroplast. Apart from that, they're expecting a revival around the festivities, and given the fact that there is expected to be GST rate cut, which could also boost the demand going forward, and obviously the valuations continue to remain quite cheap for PG Electroplast in the EMS space. When it comes to Piramal Pharma, FY27 is expected to be a strong year. The destocking pressure will ease out, and certain products are progressing well when it comes to beyond phase 3 as well as per analysts. And apart from that, the company has given a target of doubling their CDMO revenue, and they are also targeting FY30 revenue at around $2 billion with a margin of close to 25%. When it comes to companies like NBFCs like Repco, 5-star and PNB Housing, the disbursement, there's expected to be a pickup in disbursement growth. Asset quality continues to remain stable for most of them, and apart from that, 5-star is one of the first to come out of ongoing stress is what analysts believe. And when it comes to PNB Housing, profitability outlook continues to remain intact despite the MD CEO exit that we had recently seen, and these are the reasons mostly why analysts continue to remain bullish on these three counters. Apart from that, DCB Bank, the outlook is quite optimistic for the remaining 9 months of the financial year. They're expecting healthy loan growth book and NIM expansion as well going forward. And apart from that, brokerages believe that the target of management to reach the ROE of 1% could be comfortably done in FY26, and they're also expecting the company's cost to income ratio to improve going forward.